So good afternoon and very warm welcome to all of you to the webinar on fire claims management challenges and way forward. This is the first webinar of the knowledge series we are organizing bi-monthly to enhance the awareness of the most important subjects of the insurance. As we all are aware that a single event of a fire can have a devastating and long-lasting effect on a business and life. In highly competitive insurance market, differentiation through more effective claims management practice is one of the most important and effective ways to maintain the customer satisfaction. So for today, we have experts and veterans from the industry who will deliberate on details upon the subjects. I welcome all the speakers and grateful for sparing their valuable time. So first of all, I would invite Mr. Urindam Sen, CEO, JK Insurance Brokers Ltd, to give the opening remark and welcome address. Over to you, sir.
I would like to. Is on. Good afternoon, everyone. On behalf of JK Insurance Brokers, I would like to thank Mr. Gopal Murthy, Corporate Claims Head, HDFC Ergo, Mr. Vivek Johar, Director, Principal Loss Adjuster for Protocol, Director and Principal Loss Adjuster for Protocol Insurance Service and Accessories. And I would also like to thank all other panelists and co-participants for spending their valuable time and being a part of this session. The next 2 minutes I will quickly take to introduce JK Insurance. We are part of the JK organization, which is a 137-year-old entity. This organization, JK Insurance Brokers, was established in 2002 and it was licensed in 2003. And the journey started out. And the journey started out from there. And as today we service more than 450 customers across the geographical areas of the country, close to 750,000 farmers. This particular team of the claim management is headed by Shri Rajiv Hajela, well supported by Meenakshi Sharma. And we believe that while we talk about claims, while we talk about different experiences of claims, claims is a moment of truth for all of us in the business. This is where actually we leave an impression and a lasting impression on the customer. And this experiences actually last with the customer for lifelong. So how and what we do with claims, how we deal with claims, and what is the experience that we leave on the customer actually comes in this moment of truth. Saying this, I would request Ms. Neeta Prasad to hand this over to the speakers in the forum so that they can share their experience and their knowledge with us, and we can all gain from their experience and knowledge. Thank you. Over to Neeta, please.
Thank you so much, sir. Now I would request Mr. Rajiv Hajela ji to give set the tones and give the theme address.
Good afternoon, ladies and gentlemen. It's an honor to be here on this platform. Fire claims we all know about. Basically, the insurance is a game of uncertainty. When we do an insurance, we just promise a customer that we would stand by him in the need of hour. And claims is one such event where, as Mr. Sen said, it's a moment of truth. We need to stand by a customer it's very simple. any fire claim which happens has the ability to cripple the business, maybe temporarily or forever. So the idea is to make sure that the customer who has been with us, who has taken a promise from us to stand by him for next 65 days, that comes when the claim happens. So what happens if when a fire claim occurs? Immediate repercussion of any business or an individual is stoppage of cash flows. As I said, it can have a crippling effect, a short term and a long term. Short term could be that the development stops, the growth stops, and the long term is that the business winds up, no more in existence. Having said that, whenever we talk about a fire claim, our attention immediately gets drawn towards a large industrial complex or a big multinational corporations. But what we forget, fire claims do happen with individuals, a small-time shopkeeper, a SME. Now, you would wonder why I'm, differentiating all these sectors. Why the purpose is the large corporate, a multinational corporation, has all the wherewithals to manage a claim, right? They have a team in place, they have the support system in place to ensure that whenever any eventuality like this happens, is taken care of, and the loss event reaches a final conclusion in the least probable time. But on the other side, an individual or a small-time shopkeeper is hardly aware of the nitty-gritties or is not aware of the fine prints, probably doesn't know the rules and regulations. What happens with him? He gets stuck either with the denial of liability under the policy or with the delayed settlement of claims. Both these events leave a heartburn. When we look back the growth of non-life insurance market in India, it hasn't penetrated the way it should have, the way it was envisaged when the private sector was brought into the sector. The reason could be that we haven't gone far to ensure that the services in terms of claim settlements, whichever way, in a reasonable time, is done. Now, when we see claims, we only talk about the current ecosystem, the current exposures. Claim does not arise on its own. Claim discrepancy, claim disconnect arise. The root is the underwriting. We need to have a strong underwriting parameters in place. As I said about the ecosystem, it works on a limited set of parameters that are prevailing. But like any other sector of economy, even non-life business, particularly in fire, is evolving. We have newer threats. So we've seen, all of us would have seen the new IPCC report of 2022. It talks about new calamities that could happen. The infrastructure projects, the mega cities that we see in today's world probably might cease to exist by 2050. We need to plan for future. We can't remain isolated. We can't work in the present dynamics. We need to plan for future. And if we were to see those exposures, unfortunately, presently are not there. The coverages is not there. What happens? What happens to those claims if at all they arise in future? And as per the report, they are going to be there. So we need to evolve ourselves, both as an individual and as well as the industry. Knowledge acquisition is must. Knowledge empowerment of the people is must. People should know what a policy covers, what it doesn't. We need to make people aware of it. Then only the idea of penetrating the non-life insurance business into the common masses would gain traction. I'll give you one more example. Ladies and gentlemen, I guess most of the people would be from Delhi NCR. We have seen, 2 new cases which presently are not covered under the present regime of fire insurance. And this is a food for thought. I would request Mr. Gopal Murthy and both Mr. Vivek Johar, who are part and parts of the current ecosystem, but come from the different verticals. One is the ultimate claim settling agency. Another represents an insurance company, but work for the client. Mr. Johar, the loss assessor. Sir, we've seen a collapse of a building in western part of the Delhi. It was a completed building, and one of the participants was making certain structural changes in building. Building collapsed. There was a loss of life too. But then, having said that, my understanding is that this kind of claim is not payable in the current regime. We need to look at this as well. Another example in Delhi NCR, a partly completed building, almost all the flats sold off, but not occupied though, was asked to be demolished by the state. It's a judiciary system, but judiciary is part and parcel of the state as per the constitution. So it is asked to be demolished. What happens? There's no underlying asset. The building is going to be demolished by 22nd of May. Now there is a catch. What do we do? What does an individual do? Because there's no corporate involved. And the best part is the promoter, the real estate developer, has gone into NCLT. So there's no recourse available in the present regime. So we need to look at these dynamics which are evolving in the system. We need to be forward-looking. Now, as I told you earlier, the large corporates, they all have wherewithal to manage the claim. But for an individual, he needs to be taught. He needs to be told about the nuances of managing a claim. If this webinar gets restricted to, if there are no takeaways of this webinar, then probably we would be defeating the very purpose of it. We need to have certain takeaways. We need to evolve ourselves, both as individual, as corporate, and the collaboration of the insurer, who's presently being represented by Mr. Murthy, and the loss assessor firms represented by Mr. Vivek Johar. We need to sit together, and all the participants, whether they represent a corporate or they're individual, we need to sit together as all stakeholders of the ecosystem to evolve and make sure that the evolving risks are taken care of. First and foremost, for the individuals, for the small time shopkeepers, for SME customers, 2-3 things one should always take care of in order to mitigate the hardships which might come, I'm not saying which will come, which might come, is never ever meddle with the loss site. Ladies and gentlemen, the surveyor should have the full right to inspect the damaged location. Most of the people, they try and remove the things from the site. Please don't do that. Don't fiddle with the salvage. Let the salvage assessment be done by the surveyor, and let it be confirmed by the insurer. So these are the 2 things which should always be taken care of. And for individuals, of course, individuals should have a photographic collection of all the assets that they have insured in householder. We all know householders insurance in fire segment hasn't taken place so far. The reason behind this is a lot of heartburn amongst the individuals that the claims don't get settled. And if at all the claims do get settled, the liability, the assessment is not as per their assessment. So ladies and gentlemen, let's evolve a new strategy. That's all of us are stakeholders in this system. Let's develop a new ecosystem and see and ensure that in times to come, maybe 5 years down the line, when we start actually facing the impact of global warming, we are ready to confront it in a manner that nobody's interests are harmed. Neither the loss assessors are put to hardship, nor are the insurance company's balance sheet are burning. Ladies and gentlemen, with all this, thank you so much for being patient, for being a patient listener. Thank you all.
Thank you so much, Mr. Hajela. What a crisp and detailed presentation. Now I would request Mr. Gopal Murthy, sir, to come and give his perspective, insurance perspective. Before starting, sir, I would like to introduce my speaker to everyone. Mr. Murthy is a non-general insurance professional having vast experience of more than 35 years in leading public sector, private sector, general insurance companies, and also with major corporates. He has done his engineering with distinction from Andhra University, MBA from Jamnalal Bajaj Institute, AI with first in Fire Insurance and Insurance Institute of India, management from IIM's Bangalore. He handled various functions during 35 years of career spent in like risk inspection, PML calculation, risk mapping, public liability, inspections, underwriting, marketing, techno-marketing, and list is so on. So over to you, sir.
So good afternoon to all of you. Am I audible?
Welcome to your office. Yes.
You are audible, sir.
Okay, right. So because the time allotted for this is 20 minutes, it is JK Brokers have taken a very good initiative and they have asked me to write short notes on Mahabharat. Okay, where to start and where to end. It is very difficult for me to do it within 20 minutes. However, I will try my level best. So I just shared a small presentation to Neeta. If you can just share that presentation, I think it will be very easy and I can complete it within the stipulated time of 20 minutes. So what I did it, because this one, as JK Brokers rightly mentioned that this one and all, it is a very, very simple to shopkeepers to householders to major corporates. So I put it as just a simple thing that a simple one to a complex one. So whatever the time it is available, I will share it. And any one of the questions or anything can be even asked even now or even at a later stage, right? So what I put it, the first slide, it is what is the fire insurance available in the Indian market as of date? What are the various policies and types of covers? Start with very Bharat Gruha Rasha. It is essentially for the things that to cover the residential premises. It is essentially the first three policies or the three covers are meant for the small scale industry, small, medium scale. No, just please stay back. So the first one is completely for the dwellings, that is the residential things. And it is having that an under insurance. What is under insurance and all we will see at a later stage. It is an under insurance, it is not applicable. And there is an automatic increase in sum insured every year in case of the long-term policies. So it is otherwise all the insurance contracts in India are for 1 year period. So in this policy, there is having an option to take a long-term policy also. The second one is Bharat Sushma Udyam. It is other than dwellings, but again, it is for the microfinance companies having the sum insured up to 5 crores. Again, there is a waiver of under insurance up to 15%. All right. What the practical issues will come if it crosses more than 15%, we will see at the later stage. Then the third one is that Bharat Laghu Udyam. It is again SME sector and even the mid market. It other than dwellings. The sum insured limit is from 5 crores to 50 crores. Again, here also waiver of under insurance is there up to 15%. So these are the three policies which are essentially meant for the small scale people than the dwellings. And the other one is a standard fire and special perils, which is covering the 12 perils and all. And the other one is an industrial all risk policy, which is completely having that for all that industries, which covers that everything for the buildings, plant and machinery, furniture fixtures, stock in process, storage, tank farms, and so on. And the other one is a mega risk policy, which is having the sum insured of 2,500 crores and above, right? So then there are special policies which are available for the stocks, that is on the declaration policy. What is the declaration policy and all we will see as time permits, all right? And the other one is the buildings, which are the plant and machinery on the reinstatement value policies. The first slide is essentially on the various policies available. The second one is, as it is rightly mentioned, that in any one of the industry, if there is any fire loss, this one and all, it could result into loss of profit, loss of that business income, right? Those business incomes can also be covered. There is a separate policy which is known as the loss of profit policy, okay? And there are various specifications. As Mr. Rajiv rightly mentioned, that it is very, very essential to understand that specific terms and all even before taking the insurance policy. What type of the loss of profit policies, whether what is turnover basis, what is an output basis, and what is a revenue basis, what is the gross profit, which is a net trading profit plus standing charges, what is the rate of gross profit, what is standard turnover, what is annual turnover, increased cost of workings, indemnity period, deductibles. The add-on covers available, whether it is a suppliers and customers extension, whether it is a public utility extension, and the contingent BI. The whole purpose of writing or preparing the first and the second slides are what are the insurance policies available in India. And as this one concerned, as Rajiv rightly mentioned in the initial stages, what is covered is important to know. At the same time, what is not covered is also very, very important to know. So those are the things before taking the insurance policy itself. We all of us collectively work together and we are on the same page of knowing it, what is covered and what is not covered. It makes a lot of sense and avoids unnecessary misunderstandings at the time of claim. So I strongly believe the success of all of us, whether the client or insurance company or intermediaries, that is brokers and the surveyors, all our life will become easy once we all of us, we know exactly what we are covering and we are not covering, equally important. So these are the first two slides are meant for that, right? Depending upon the time, then we can go into more deliberations on that. And the simple thing I started that we all of us, we know that, we say that, we know that what is the principles of general insurance. We all of us, we say, we all of us, we know that. But at the time of a claim, what type of issues will come? On the left-hand side, what are the principles of the general insurance? One is an utmost good faith. Now, utmost good faith is that this one, whatever the insured tells that I am having an existence of a building, the building value is 100 crores. As an insurance company, I have a reason to believe the existence of the building and the value of that 100 crores. At the time of giving an insurance policy, we really do not see that. That is the principle of utmost good faith. But at the time of a claim, what type of problems I encounter? There is a heavy underinsurance. Valuation is an issue. Disclosures are an issue. It is in the silent risk, but it is not disclosed. Existence of a stocks or non-existence is an issue. Complaints of that regulatory things are having an issue. Very recently, about a week back, we have received a notice from the GST commissioner stating that the insured says that he has taken an insurance policy and you have collected an insurance premium. But all the transactions of the stock which the insured is having dubious. So please explain and clarify. Now, we believe in an utmost good faith. Suppose some insured or the client tells, sir, I am having a plant at Ankleshwar, the value is 100 crores. I have a reason to believe of the existence of a plant and the value is 100 crores. I really do not check whether all the transactions are legally done or illegal. So therefore, the onus comes nowadays on the insurance companies and even in intermediaries like brokers and over and above that, anyhow, the client. Similarly, an insurable interest, the ownership issues. So who has to take an insurance policy, right? Of late, when we are having a lot of online policies, now he is not having an insurance, but only thing someone asks our phone, sir, are you having a flat? He says, yes. Sir, what is the value of that? 50 lakhs. Sir, are you having an insurance? No. Sir, why can't you take an insurance which is available at 5,000? He will say, yes, 50 lakhs rupees is the sum insured and that 5,000 rupees is the premium collected. But when it is actually when there is a loss reported, at the time it is found, it doesn't belong to him. It belongs to his in-laws. Now again, how do we handle at the time of a claim? Because he is not having an insurable interest who has taken the policy. Similarly, for industries, there is a lot of plant and machinery which is having at an offset location. Location given, it is an Ankleshwar example, but all that plant and machinery, it is there at Baroda. In the policy, it says the plant and machinery, it is Ankleshwar, but actual at the time of a claim, it is found it is at Baroda. Again, there is a dispute. Goods held in trust. The goods actually, it is expected to be covered, which are owned by the insured. If at all he is insuring it, the goods belonging to someone, it is specifically to be notified, right? Just because he has paid the premium, he doesn't become the owner of the goods. At the time of a claim, it is found he is not having any insurable interest. Paying the claim will become difficult. Then the third principle is an indemnity, which is again, it is a reinstatement value or a market value. What is a reinstatement value? This one and all, or this one, but the challenges will come. Most of the people who are from the finance, they know that what is the original book value, and subsequently by applying the depreciation, what is the value at the original value and the capitalized value as well as the book value of today. If there is a building of, for example, of a 2010, it may be having a crore rupees. That is the actually capitalized. It is capitalized 1 crore rupees. Over a period of time, by applying depreciation as per the tax rules, if it becomes 50 lakhs, book value is 50 lakhs. But that is not the insurance. The insurance is, we look at it, if the same identical building, if we want to construct in 2022, what is the value? If the value is 2 crores, for example, it is expected to be insured for 2 crores. If you insure it for 1 crore, or if that is the original capitalized cost, or if he insures at 50 lakhs rupees, both the cases, in case of a claim, he will not get full indemnity. Then the disputes or even a displeasure takes place, right? So then the GST reversals, where some of these items for the plant and machinery, there is a provision available for the reversal, and then some places it is not available, reversal is not possible. So he should be aware of that, right? The subrogation is another principle, which is the recovery from the third party who is responsible for the loss or damage. Now, typically in a property insurance, the subrogation rights are not really invoked in the Indian market, unlike in a marine insurance. However, over a period of time, complex risks and as well as the high value losses, even reinsurers are insisting that the recovery from the third party who is responsible for the loss or damage. All right. Suppose if there is an Indian oil tank explosion, then the nearby five-star hotel gets damaged. Earlier days, about 10 years or 15 years back, this five-star property, if it is insured, insurance company, you to pay the claim and forget it. But now the reinsurers are insisting, if an Indian oil is responsible for the loss or damage, you sue them and recover the money from the Indian oil, not from the insurance company. So therefore, the subrogation also it is becoming, in a property insurance is becoming more relevant, which is more relevant earlier days for marine insurance. Contribution is one more thing that where that people will take that multiple policies with different insurers and there is no clarity. And then there is a claim, there is a disputes. We are having it recently. One policy is taken with us and the second policy it is also taken from some other insurance company. When there is a claim, if there this one and all, we want to say that the other insurer is responsible. Other insurer says that no, you are responsible. All right. In the entire process, the client suffers. Therefore, multiple insurance policies, when you are taking from different insurance companies, you should have a specific clarity. Now, suppose, for example, the goods held in trust, it is insured with A insurance company. Goods owned by him, it is insured with B insurance company. It should be clearly mentioned in the policy document to avoid disputes, misunderstandings at the time of claims. And the proximate cause is the normal, this one as a principle. So what is the root cause for the loss or damage that will be seen but before deciding the admissibility of the claim. Can we move to the next slide, please?
Thank you so much, sir. Now I would request Vivek Johar sir to give his address, the broker's perspective. Over to you, sir. And before
I would say
sir's
that
address, I would like to just give the introduction of sir. Mr. Johar sir is a veteran having extensive experience of around 31 years in the industry. He is a Bachelor of Engineering from Nagpur University. He holds license and certification for Chartered Engineering, IEI Kolkata, fellow member of Indian Institute of Valuers, fellowship from Insurance Institute of India. Thank you, and over to you, sir.
very good afternoon, everybody. What Murthy sir has already given the entire perspective of insurance part. So there's nothing much, and whatever Rajiv has set up the tone, this is nothing much left to say. But yes, from the surveyor's perspective, there are many things which are very important in the entire claim process. We as loss adjusters come into play only at the time of the claim. By that time, the policy has already been underwritten, the terms are already set, and we as loss adjusters have to work under the that particular framework of the policy itself. Having said that, there are certain things which are very important, which we as loss adjusters go as an eyes and ears for the insurers, because what Murthy sir has already explained, that there has to be an utmost faith. So that utmost faith, one, it has been set up by the client, by the insured, in while declaring the sum insured, declaring the risk. That utmost faith has to be maintained, and we see we as loss adjusters go there, whatever the declaration that particular client, particular insured has made in his declaration while taking the risk, were they in order? If they were in order, perfectly fine. And then whether the loss or the damages what the client has suffered are within the framework of the policy, and whether any conditions are there, then I don't think no insurer has any point in saying no to the claim. They are always, it is always, we always go to the loss side that 99 with 99.99%, I would say, that the damage has occurred, the claim is genuine. The only thing is whether it is falling in the policy purview. Yes, if it is falling, and what is the quantum which has to be paid, and that has to be taken. So I've just going ahead. I've shared my particular slides with Neeta, and I'll ask her to request her to share that with on the screen. I will quickly go through these slides. There are many slides, but I will quickly go through relevant portions which are important to be discussed here, and then we can take it further. Yeah. So what already has been explained, that there are certain items which there are many different policies available in the market, and going ahead for particularly fire claims, we have IR policy, mega risk policy, and the latest set of policies for the small clients, small and medium clients, which is with regard to Bharat Grah Riksha, Bharat Sukshma Udyam, and Laghu Udyog. These are the policies which have started coming in. So these are the fire policies. When we say fire policies here in my slide, if you see the operational risk, except for the machinery breakdown, other three policies, which is industrial or risk, mega risk, and standard fire policies. These are covering the fire policy. Next, ma'am, we'll very quickly go through this, and I will then explain is we can go through. This is again what Rajiv had said. Any kind of fire policy, fire or any damages will affect the business of the client, and for that the business interruption policies are also there. We are not discussing that, but yes, there are there with regard to this. Next, ma'am. For any way we back, ma'am, back. No, the other side, ma'am. Yeah, this. For any, when we go as a surveyor, we as a loss adjusters. So these are the 5-6 points we have to identify, which is very important, and then we can discuss on it as whether the loss is covered under the policy or not. We have to see the policy is in existence, the dates are in place, the policy is in effect or not, whether the event has been accidental or whether it is out of any exclusions, what has been the cause of loss, what has been, once these three are identified, the first three, whether policy is in existence, what the event was accidental or not a slow and gradual process, and the cause of loss is very much covered in the policy. Once these three are identified, then there is an assessment which comes into play. What should be loss payable to the uh, to the insured, and if at all there is an average clause which is under insurance, and excess which have to be taken care of. Once we have all this into point, we submit our survey report. The challenges in this, ma'am, when can we go on to the next slide? The challenges what we face is with regard to the entire process is disputes with regard to assessment, with regard to claim settlement, and what happens in certain cases. I'm not saying any particular insurance company or particular type of insurance companies. Uh, we as surveyors also do take time for loss assessment, which may be at times it could be due to the documents which client is not able to understand what kind of documents they are to give, or the like Rajiv initially had said that do not touch the site, do not l- disturb the site, do not take care of the salvage. So once we are presented with the factual and actual position, the assessments will never be a problem. We will be able to give the assessment very, very fast. So this is the of course, at times the client doesn't have a business interruption policy, and acting prudently, they have to start the business. So they, in that haste, they might do something which might prejudice their claim. So for that particular point, we always tell the client, yes, you do go ahead whatever you want to, but keep an evidence where the surveyors and loss adjusters can take care of that. Uh, some insurers do a very, very fast claim settlement. As a for this, I would know, I know for the set of insurers sitting here, uh, you need to, or you ought to believe in your surveyors. When you are appointing a surveyor, a particular surveyor, individual surveyor, or a corporate surveyor, or a surveying agency, you need to have a faith in them. You need to do whatever they are doing, they are doing within the framework of the policy. But there are certain set of insurers who then do this, start scrutinizing the report and doing the entire thing all again, which survey has already done it. So that claim settlement process is a very vast. They don't. That means the client has to go the again through the entire process which surveyor might have asked the client. So that takes the settlement process very long. Uh, that has to be taken care of. And remember, just 1 minute back, the terms and conditions back, ma'am. Terms and conditions of the policy are not attached by the underwriters at times. So this is very important, that they should be given the policy, full and fledged policy, so that tomorrow there, if there is a dispute, they have the entire, they cannot say that yes, the terms and conditions were not provided with. Next, ma'am. I'll just give you here a certain example is in the kind of coverage or the kind of points which we have is, this description says all stocks pertaining to insured trace, and it says that then the breakup is also given as raw material and FD. What about WIP? Will it stand covered? So these are the small things which insured, the brokers and insurers, because we are coming in at a very late stage. So this, some underwriters might take it positively and say that WIP is part of 90 crores. Some underwriters will say WIP is not insured at all. So we have to have these kind of things have to be sorted out at day one itself while underwriting. So here, I would say brokers have a major role to play, because at times, if it's not a corporate client, if it's a small client who is dependent only and only on the brokers, so that kind of underwriting, broker would know the risk better than the underwriters at the point of time. So these points will have to be taken care of by the brokers. Then the spoilage of the stocks. There are certain policies which we have spoilage of stocks or spontaneous combustion issues which come into play. So these points have to be taken care of by the brokers. Next one. There are certain points which I'm talking. What are the points which we face, which are subject to some kind of ambiguities over the period of time in the claims? Then stocks covered under the separate fire policy. This is to avoid the breaching of 25 crore limit for application of lower time excess. This for a lower excess, I would say, not time excess, lower excess. So in that case also, there are certain underwriters who take, yes, some insured stocks might be 200 crores only, but if the entirety is the total sum, because the tariff says that the entire individual sum insured of the individual location has to be more than 2500 crores. If that is breached, so there would be certain points which we have to be taken care of while the underwriting. Next, ma'am. Uh, Claims management again would say that these are the different policies which with different events that could occur. It could be accident, it could be any kind of accident which might be covered under IR policy. Theft would be there, then testing period losses would be there, then fire would be there. uh, these are the losses which we are non-AOG. Then we have AOG perils. So as a surveyors, we have to identify what are the uh, peril, which is the peril which is operated, because it is there are two important factors to it. One is whether the loss is fire, if it's an IR policy, whether the loss is falling under fire section or MBD section, whether the loss is AOG or non-AOG, because the excess will be different in the two scenarios. So this is very important to ascertain the event, the kind of event that has occurred. Next, ma'am. For AOG, what has happened is over a period we have been seeing these kind of in flood claims, especially in flood claims. There has been issues with regard to the nature of event and number of events. There is a flood which has happened today, and maybe the water receded in 2 days. Another flood event has happened, but the by that time the losses have not been surveyed. Whether it is one event or two events, we have to see whether there was a continuity in event or break in chain of the event, because that I would say would not only affect the particular event also, but at times it affects the underwriters also, because in treaties there will be a certain limit to the treaties on a per event basis. So the all these things have to be uh, seen in a proper way, which we as a loss adjusters have we play an important part, I would say, here, to understand the event, the chain of events, and give the right kind of perspective to the underwriters, and see to it that yes, there is applicable one access, single access, because that is what the client would be looking at. But if at all, if we are able to prove that there's a continuity of event, then it will be a single access. So all these things have to be seen. Next, ma'am. Why I've already told you is why it is important to ascertain the cause, because it is very important. There, as of now, although almost all the policies these days have a BI involved to it, and the moment and there might be some kind of like IR policies or mega policies, they would be policy which has BI, MLOP, FLOP, and a separate access for MBD and fire. So it becomes very important to ascertain what is the cause of loss and which section the claim would be falling. Uh, this at times might falls a dispute between the for us to solve, because there might be a small rupture in the pipeline, or a very small rupture causing leakage and then fire. So we have to ascertain what are the damages more due to fire or to rupture or because of rupture, because that will specifically define the FLOP or MLOP treatment, whether it is 7 days excess or 14 days excess, or in case it is 45 days excess for MLOP. So that will affect their insured's claim in a very vast manner. Similarly, excess for material damage is different in fire and MLOP. That has to be seen. Next, we can go. Next we can go, ma'am. This is the same thing which I just explained. The root cause is important for fire, this thing. And as of today, in large claims probably, underwriters are insisting for forensic examinations. So as a forensic exam, this thing, it's not that under client should not be taking it a positive manner. It is not only to ascertain the cause of loss for the underwriters, but it is for an important point that this is a data being created, which we in India don't have that kind of data which is available. So if that data becomes available to us, what are the causes which are happening uh, very regularly, which is causing the damages to a particular industry. It can be set as a bible for the future, that yes, where the precautions that a particular industry can take to avoid any such kind of happenings. And of course, with all this, the relevances with regard to timings is sense importance, because it will take care of the uh, excess, and timing for any kind of fire claims, forensic and root causes at the earliest, because uh, the moment you touch, you disturb this scene of fire, the set fire, that then we might not be doing the justice to the forensic examinations. So that is very important. Uh, this is for the underwriters. Why we ask for RCA, forensic examination, from external sources sometimes is because we are not the experts in all fields. So we have to depend on external agencies. We have to take approvals from the underwriters, because it is a cost to the company, and it is again loading onto the claim values. But at the same time, it is very, very important, because all this is helping out in ascertaining what is the cause of loss and what is the importance. Next, ma'am. Uh, Techno commercial aspect is the assessment, because assessment at times can, in insurance parlance, I would say it is not always commercial, it is not always technical. We have to see lot of technical into the items which are affected, and at the same time we have to see what are the commercial aspects with regard to the policy. So I always say that assessment for us, as a, we might be engineers or chartered accountants. Surveyor individually can be engineer or a chartered accountant, but he has to act as a techno-commercial expert for the assessing the loss. Policy is conditions we have to keep in view. And as I earlier said, that loss adjuster has to be a right choice for the underwriters, because at the end they need to believe on their loss adjuster. And probably the time has come when insurance companies have started believing in the right kind of loss adjusters. So that is it. And next one is, I'll just quickly go through is, these are the some of the documents we, again I've said, we, some of the documents which will be required for carrying out the assessments, which includes estimates, which we report purchase orders, proof of payments, invoices that are required, and we verify the reinstatement. Next one. Uh, it is very important, and it's point of dispute always, I would say, because underwrite at time client has to save on a premium. They take care of they not see the what is the importance of the sum insured and declare the sum insured on a very low value, which might save them a little of premium in the beginning, but at the end they might be losing heavily in due to under insurance. But as Murthy sir has already given that what are the different three policies which have come in, they take care of under insurances. Waiver of under insurance is there up to 15% on, and for Graha Raksha there is no under insurance. So they do take care of that, but at the same time, it doesn't mean that we should not be looking for lesser sum insured. It should be proper sum insured, which has to be there. Next one. Salvage is a very major thing, but it is not at all major, I would say, unless it is perishable and uninsured, debris of insured or uninsured salvage is not there. So salvage is again a very common, if somebody has no different, I would say, motives, then salvage is always a point which can be immediately sorted out. That is all for as far as when we see as a loss assessor, we go as a loss assessor, we see all these things into the assessment. But yes, there are challenges for the loss assessment for the fire claims. We as for the fire claims, the most important is, yes, the cause, which has to be seen whether the loss is covered under the policy or what is the originating point of fire. That is all, ma'am. Hello.
Thank you so much, sir, for detailed deliberation. Now I would request Rajiv sir to take over and moderate the question and answer session. Floor is open for question and answer. If any audience want to ask and have a query, can directly ask here. Thank you.
Good afternoon, ladies and gentlemen.
Good afternoon.
Back again. If any of the participants have any queries or questions, either for Mr. Gopal Murthy or for Mr. Vivek Jauhar, the platform is open. Request to come out with their queries, doubts, or your experiences. If anybody has adverse or positive experiences to share,
Sir, I've got the question and mailed you from one participant. I've mailed you, sir.
okay. Okay. Neeta, shall I? This question is, which you sent me, is for Mr. Vivek Jauhar.
Yeah.
Yeah.
So this is one of the question from one of the participants, which Neeta just shared with me. The observation is a kind of experience one might have had during his or her in the event of a fire claim. The question goes like this: why do I get a detailed list of documents, which I personally feel, there's a question from the participant, why do I get a detailed list of documents when I feel some of the documents are irrelevant to the claim that has been filed? So is it just a printed format, or any thought process go into it before the letter gets released from the loss assessor firms? It's a standard format.
Yeah, there is certainly a standard format which might have 10, 15, 20, depending on the type of claim, 10, 15, 20, 30, 40 requirements which go into requirement of a claim. But this is a standard format which is not forwarded to any insured. Once the loss has been attended to, once the loss has been seen that what is the kind of industry and what are the kind of losses and what are the kind of damages involved, those 40-50 pointer letter will be then cut down to maybe 10 points, maybe 15 points, maybe 20 points, or maybe more, depending which will be short off to the client. So in all, there might be documents which are required, and at times we do get a query, why are these documents being asked for. There are certain documents which underwriters, which the insured sees that this is not related to the loss, but in case in very specifically, we have examples where we as loss adjusters have to verify whatever has been declared with regard to at the time of policy. So looking at those policy terms and conditions, we need to, it might not be required for loss assessment, but for the overall policy purview, policy coverage, and the policy terms and conditions and warranties, we need to verify those data for which these particular documents are asked for. We might not be sharing all the documents with the underwriters. We keep a lot of them to ourselves after verifications, and we just put it down as part of the our report itself, our data repository itself. Yeah. We are not able to hear you. We are not able to hear you.
Sorry, I'm so sorry. Point well taken, sir. Thank you so much for the clarity, because it goes on to remove a lot of heartburns among a lot of people who might feel that some kind of irrelevant information is being asked for, but you made it very clear what is the purpose of information that is being sought. It's primarily meant to alleviate any kind of hardship that the insured might have had during the long course of claim settlement. Thank you so much, sir. Another question which I have received is addressed to Mr. Murthy, sir. A lot of time, a customer, feels betrayed. That's precisely the wording, sir. So nothing from my side. Feels betrayed when at the end of the day he gets to know that if he has sought a claim of 100 rupees, there's application of underinsurance and he gets only 75 rupees. So what I would add this sentence from my side, what Mr. Johar said about the adequacy sum insured. Could underwriters or the insurance company be of any support role at the time of insurance so that the customer doesn't face this kind of scenario?
Yeah, it is a very good question. When I was on the client side, or even from the insurance company side, it is a regular friction on fixing of sum insured. All right. So the point which we always do that is how frequently the asset it has been valued. Now I am giving an example of that. A simple one example: if it is an imported machinery, it has been insured at an exchange rate of 40 rupees per dollar. Now today it is 70 rupees, right? So when there is just a simple example of this one, lot of the disputes, when as you rightly, the question whoever has asked, very rightly, they asked the question, but how frequently we review our fixing of the sum insured. It is therefore, whether it is a collectively with an insurance company or the brokers or the insuring public, just to say that what is the value I am insuring it, where from I got it. Now, every day in and day out, I will have two challenges. Especially whenever I talk about an imported machinery or an imported thing, it is the dollar value fluctuation. Their own books of accounts, they will say that where from you have arrived this 10 crore rupees, they will say that we have taken exchange rate of 40 rupees. Now the exchange rate is 70 rupees. So therefore, even that there is no question of anything giving a benefit of doubt to them. Two, consecutive governments, when they change the customs duty, when the original equipment in 2015, when the exchange duty, that the customs duty was 20%, now today it is 45%. Now their own books of accounts says that the duty considered 20. Now they say that when they have imported, when reinstating it, it is 45%. So therefore, from an insuring public point of view, but we or I recommend that collectively every 5 years, we should review whenever there is a fixing of sum insured. I go one step ahead. Whenever, whichever the finance gives the budget presentation. Is it going to be virtue of the budget within the country? Within the country. Just if you review it, if you marginally you pay a difference of premium, okay, for the increase in sum insured, at the time of claim, there will not be any hot bar.
Thank you so much for the detailed explanation. And I guess this point was addressed to by Mr. Vivek Johar also when he was describing about the loss assessment procedure. So I guess the gentleman who raised this query would be satisfied with this query, with this answer, sir. And one more query which I have received from the participant is, do we have a standard timelines in claim settlement, sir? There's a question. Yes, sir.
If at all we look at it, policy holders protection, as far as all the insurance companies, they are required to settle the claim within 30 days from the receipt of the last document. Okay, if it is not paid within the 30 days, insurance company are required to pay penal interest. As far as our company, it is a process. We do not want to pay ₹1 penal interest because it is going to be reported to our board. So therefore, a straight answer to that is, as per the policy holders protection, all the insurance companies are required to settle the claim within 30 days from the date of receipt of the last document from the insured. So most of the times, that is the reason we request both the surveyors and as well as the clients also, please keep all the documents ready as if your claim is a payable claim, including the NOC. Claim assess most of the times where the displeasure comes, even when I am on the client side also, I share it as if I am the client also. So surveyors will share their assessment. Then after that lot of debates, deliberations and all, they say that, okay, ₹1 crore is acceptable. When they say ₹1 crore is acceptable, then if you see the policy, there is an agreed bank clause. The banker is State Bank of India, for example. Now, an insurance company will say that, I will make this payment ₹1 crore directly to the State Bank of India. Then the client says that, no, I will get the NOC. The NOC will take its own time. Say, for example, now this coming week, this Thursday, Friday, Saturday, Sunday are the holidays. The 4 days are the bank holidays are there. Consent has been given. The CFO of a company is very much interested of getting that ₹1 crore. Rightfully so. All right. But what happens? The NOC is not available. And the same CFO, he doesn't agree to make the payment to State Bank of India. As per the agreed bank clause, I am required to make the payment to the banker. So I will make the payment to the State Bank. The client says that, no, I want the payment in my name. So when we say that we want an NOC, NOC will take another 10 days. So then what happens? I have already given the consent today. For example, 1st of April, I got the payment from the insurance company after 15th of April. So therefore, we always request that whenever there is a bank clause, and recently, just since this question has come, I am also mentioning that there is a security trust is this one that is known as the TRA, Trust and Retention Agreement. In a trust and retention agreement, it says that lead banker is Axis Bank. In the policy, it is mentioned agreed bank clause, State Bank of India. Now, when we ask, you get the NOC from both the banks, we all of us can imagine how much time that it will take. So therefore, most of the times, but if you make it as an answer right, what we look at it is that we want to expedite early settlement of the claim, for which if the client also cooperates, I think that all the things, moment I get the last document, I will ensure that, of course, accept that very high value payments of a 5 crores, 10 crores and all additional clients, it will be settled within a week's time.
Okay. Thank you so much, sir. You've given the regulatory perspective also and the practical difficulties that are encountered while settling the claim within a time frame that you have decided as per your company's policy. So I guess the gentleman is fairly satisfied. One more query, which is going to be the last question in the QA session, sir. I've just received it. It's open to both to you, gentlemen, Mr. Murthy and Mr. Johar. Whoever prefers to answer it, it'd be a pleasure. How the loss assessed at reinstatement cost or the original purchase cost? Why depreciation applies if the insured is on reinstatement cost? This is a question from one of the participants.
I would reply to that, sir, and sir will pinpoint where I am gone wrong into this.
Thank you, sir.
That the reinstatement cost or the loss assessed is on the reinstatement cost. Whatever the cost that has been incurred to reinstate or repair the damages is the assessment of loss on reinstatement basis. This would be all subject to all policy conditions with regard to any under insurance or salvage or excess. But the loss assessed is actually loss incurred to repair the damages in the same form to bring the client into the new with the new machinery as before the loss, which should have the same specifications. No technological advancements or no betterment would be there. So that is how the loss is assessed on reinstatement basis. Or original purchase cost is different because that might be old cost. So we don't assess the loss on reinstatement basis, taking original purchase cost into view. And depreciation is certainly not applied if the loss is being settled on reinstatement basis. But yes, on market value policies, depreciation is applied on the reinstatement assessments which has been done.
Just to
Thank you
add,
so much.
just to
Yes, sir.
add one small point, Vivek has nicely covered that. The one more challenge it will come, or where the dissatisfaction comes. I have taken a reinstatement value policy, but why the surveyors have deducted the depreciation? All right. Besides this that betterments and all, I will give one simple example. In the same policy, it also says that reinstatement has to be completed within 1 year.
Right.
By any reason, COVID or otherwise, if the reinstatement has not completed within 1 year and the insured has not taken an extension from the insurance company, the claim has to be settled on market value. That is the depreciated value. That is applying the depreciation. So this sometimes the client may not be aware when he has taken a reinstatement value, but he is having an obligation to complete the reinstatement within 1 year. Has he done or not? That is also one area. Sometimes there is a misunderstanding. Right? From my side, I thank you very much for this JK Insurance Brokers for conducting this wonderful webinar and then allowing us to speak and allowing us to answer. Thanks very much to all of you, including Vivek Johar also.
Thank you so much, sir. And I guess the lady who asked this question is fully satisfied with the replies given by the gentlemen who are actually into this field. And so we are running short of time. So I ask Ms. Neeta to take over from me. The QA session stands over. Thank you so much, gentlemen.
Very interactive and thorough session, sir. Thank you so much. Now I would invite Ms. Shivani Kohli to give formal vote of thanks.
Hello, everyone. On behalf of JK Insurance, I feel proud and honored to present a formal vote of thanks. I'm thankful to Mr. Gopal Murthy, Corporate Claims Head, HDFC Argo, and Mr. Vivek Johar, Director and Principal, Loss Adjuster, Protocol, Insurance Surveyors, for being here with us and giving their insights and experts' view on today's subject, fire claims management and challenge. I'm thankful to my colleague, Mr. Rajiv and Mr. Sain, for their addresses. And I'm thankful to the audience for being patient and curious on the subject and asking very nice questions, for more clarity. I'm sure that this has come as very meaningful and useful and elaborated sessions on the subject. I would like to inform that JK Insurance definitely going to do such sessions in futures too. So I would request audience to be connected with us and take participations in all such sessions. And I would request Mr. Murthy and Mr. Johar for their, nice and, elaborative session. Thank you so much.